Hey everyone, welcome back to the channel. I hope you're doing great. Today we're talking about a company that most people don't really see in the headlines every day, but it plays a major role in how money moves around the world. And the crazy part is, you might have already used their technology today without even realizing it. The company is called Fiserv, ticker symbol FI, and they operate a lot of the behind-the-scenes technology that lets payments work smoothly. Whether you're swiping your debit card, tapping your phone, transferring money online, or using a banking app. Now, the reason we're talking about Fiserv today is because something interesting is happening. Big institutional investors are quietly increasing their holdings, there's insider buying happening, and analysts seem a bit unsure. And whenever we see these three things together, institutions buying, insiders buying, and analysts mixed, that usually means a story is forming beneath the surface. So in this video, we're going to break that down in a simple and human way. What's happening? Why are big players making moves? And what might it mean for regular investors like us? All right, let's start. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. Big investors are not sleeping on Fiserv. So first, let's talk about SFE Investment Counsel. This is not a small retail investor, and we're talking about a professional investment firm that manages serious money. They recently filed their quarterly report with the SEC, and in that filing, they revealed something important. They increased their position in Fiserv by around 27%. Now, they didn't just buy a couple hundred shares. They bought almost 8,000 more shares, bringing their total holdings to 37,529 shares, valued at roughly $6.47 million. And that's not something firms do randomly. They don't wake up one morning and say, let's just increase our stake for fun. No, this kind of buying usually reflects strategy and conviction. But SFE isn't the only one in the room. That's actually the part that caught my attention. We're seeing multiple institutional investors making moves in the same direction. For example, Brighton Jones LLC almost doubled their holdings, a 91.9% increase. That's not small. That's someone saying, we want more of this. Bison Wealth LLC also added more to their position. Allworth Financial LP increased by 7.5%. And some firms like MJP Associates even initiated brand new positions recently. And here's a number that really matters. About 91% of Fiserv's shares are owned by institutional investors. That's huge. That means the stock is largely in the hands of professional money managers. And companies that are mostly institution-owned tend to be more stable, well-studied, and less hype-driven. Institutions don't chase hype. They chase value and long-term positioning. So when multiple firms quietly increase their exposure, it's worth paying attention, even if the stock price doesn't look exciting at the moment. Now let's talk insider buying. This part is big. Okay, now here's where it gets more interesting. Recently, one of Fiserv's board members, Lance M. Fritz, purchased 10,000 shares of the company. Now stop right there. This is important. This wasn't part of a salary or stock award. He bought these shares with his own money. He spent about $651,000 to do it, paying around $65 per share. And after this transaction, he now holds over 13,000 shares total. Insider buying is one of the strongest signals in stock evaluation, because insiders know the company better than anyone outside. They understand the roadmap. They see the internal numbers. They know what deals are coming, what contracts are being negotiated, what growth areas are developing. So when an insider buys shares with their own cash, it's usually because they believe the stock is undervalued, or the market is mispricing the business, or something positive is likely ahead that the market isn't paying attention to yet. Executives don't gamble their own money blindly. This type of move says confidence. But analysts are mixed when that's the twist. Now, interestingly, Wall Street analysts are not all on the same page here. Some analysts still really like the stock and believe it's undervalued. For example, Barclays has an overweight rating and set a $175 price target. But others are playing more cautiously. Keefe, Bruyette, and Woods cut their price target down. Jefferies dropped their target to $125 and gave it a hold rating. William Blair downgraded it to market perform. Wells Fargo also moved to a hold. So the analyst breakdown looks like this. Analysts say buy, say hold, say sell. The average price target is around $127. So what does this tell us? Analysts are reacting to short-term stock price weakness and market sentiment, not the underlying business performance. They're being cautious because the stock has been volatile. But institutional investors and insiders, the people who tend to think long-term, are acting in the opposite direction. This is exactly where opportunities often show up. Not when everything is perfect, But when there's noise on the surface and strength underneath, the company itself is not weak. Let's take a step back. What kind of company is this? Fiserv processes billions of transactions worldwide. Banks rely on them. Merchants rely on them. Payment networks rely on them. Even if people don't know the brand, the financial world depends on this infrastructure. Financial performance. Quarterly revenue, $4.32 billion. EPS, $191. Full year projected earnings, $10.23 per share. Return on equity, 19.5%. Net margin, 17%. PE ratio around 9 to 10, which is actually low for a tech-enabled financial company. So the company is profitable, it's efficient. And it operates in a sector where demand doesn't disappear because the world doesn't stop using payments. This is the kind of business that compounds quietly. Big institutional investors are adding shares. A company insider spent his own money to buy stock. Analysts are cautious but not negative, just uncertain. The business is fundamentally strong and profitable. The stock has pulled back, which could mean opportunity for patient long-term investors. This is not about hype. This is about value versus sentiment. Right now, sentiment is down, but value is still there. And investors who think long-term tend to look at situations exactly like this. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any updates. See you in the next video.